Nadja, thanks very much for joining us. It would be good to get your sense, I think, on what you're seeing at the moment in terms of the market. Obviously, significant changes. What are you seeing, particularly on the debt side, both, I guess, from the borrowers, but also the lending side?
So overall, we are still in a kind of a challenging market situation. So we are seeing rising interest rates. We are seeing rising construction costs. We currently have an inflation situation. And together with all of this kind of uncertain situation, especially taking the war in the Ukraine into account, on the lender side, we are definitely seeing that the banks acting more conservative. So they are currently being on a sideline. Everything takes longer. They are withdrawing term sheets, what didn't happen in the past. We see a lot of alternative and institutional investors acting like that they are seeing real estate as kind of a safe haven investment, especially in Germany, because we have shown in the German real estate industry that real estate is definitely some kind of safe haven asset, especially on the residential and on the office and the food industry area. Therefore, we are seeing definitely still interest from these institutional alternative investor side for real estate business. And on the other side, from the sponsor side, we are currently seeing an even more attractive risk-return profile. As we bring both sides inside CORESTATE Bank together, means that we are creating the best possible fit from a lender's perspective and from the sponsor's perspective, creating some kind of tailor-made solution for them. We are seeing definitely even more attractive risk-return profiles, which normally have been financed by banks in the past. But to be honest, there is definitely kind of a shifting situation that even from the sponsor side, the sponsors are looking more selectively on assets. So, for example, taking the uncertainty into account, they are currently focusing more on already established buildings that they can refurbish or repositioning, so that they have a more foreseeable, more manageable time period, instead of buying a green land, developing it further and having a planning period of up to 5 years' time, because nobody can tell you what will happen to construction costs in this 5-year time period.
Looking at the sectors, the types of assets, the types of locations, what are you seeing in terms of particularly the borrowers? What are they coming to you in terms of, the lending requests in a way?
The borrowers are definitely, they're reaching out, especially with a focus on the major cities. We can discuss definitely A, B and C cities still. This is definitely still of interest for them. But inside the less attractive cities, the micro-location is becoming more and more important. And from the asset class itself, it's office, it's residential. We are definitely seeing a lot of hotel and retail financing requests as well, because these are challenging markets at the moment. I would not say that it's not possible to get a finance for these asset classes, but it's definitely more complicated compared to the previous years.
Great, really interested to catch up. Thanks very much for joining us, Nadja.
Thanks.